Shamai! I'm Agile Die, the workplace guy. Today we're talking budgeting, finances, in the workplace and personal. Cue the intro. So with that in mind, who better to speak to about finance than my own financial advisor and good friend, Jon Ashcroft. Welcome, Jon.
Hi, Dave.
Just like to say thank you ever so much for taking the time to share your expertise with me and the viewers.
No problem at all.
So, obviously you're not any good at FA unless you've got a beautiful home, and your house is beautiful. What a wonderful setting. So let's get cracking, let's go straight into it. Question one. As you know, Jon, I like to talk about the workplace. I'm that type of guy. With over 40% in the UK and 60% globally working from home, how does that impact them as a worker, but also the workplace itself?
Okay. Yeah, it's a great question. I think it's probably different for everybody really in how we've dealt with the impacts of working from home, but certainly from the worker, you will have hopefully noticed maybe a decrease in your petrol spend, fuel spend. Also maybe you're not going out for lunch as much, you're not having a drink after work. So in theory, our sort of socialising costs through work rather than personal have gone down quite a lot. On the flip side though, you probably spent a bit more on your heating and perhaps you've had to treat yourself a little bit more at home to kind of make it feel like there was some release from work. And I suppose the other thing is if you've had a drop in income, that may have impacted your pension planning through work. And if you did things like driving you personal mileage, then perhaps it's going to affect some sort of tax reliefs. But on the other side of that, of course, if you're working from home, a lot of places will allow you to, through HMRC, claim tax relief for using your home as an office. So there's going to be quite a few impacts from a workplace, from a personal perspective.
What about from a worker's perspective?
From an employer's perspective, you're obviously looking at places like your office now seeming a little bit redundant. So it might initially seem like a bit of a financial burden because you will have your work, this big office that you're paying for maybe heating, electricity, etc. You might also have a fleet of cars that aren't really being used. But in the long term, that may be seen as a sort of benefit in that they can start to see what is the essential part of their business, so they can start to trim down. So all those things that perhaps they saw as essential for the last 10, 15 years are now starting to feel like perhaps they're not as important in the 21st century. So they might be able to start cutting back on their physical presence because they've invested in online technology to be able to deliver their service to clients. So in theory, there's an opportunity for companies to save money on their sort of their buildings and their sort of cars, etc. But they'll also probably spend a bit of money on gearing up for this. So initially last year now, they may have found that spending money on new software, new hardware to be able to get people to work remotely has been a bit of a burden on them. And also, I've read in quite a lot of places that productivity has improved from people working at home. So again, it might have helped them realise how to get the best out of their staff. And perhaps it's not always micromanaging in office. So I think there's been, again, multiple ways of looking at it, but financial benefits and also costs of having to work from home.
Yeah, and I suppose with all those savings and also increasing productivity, companies making more money, maybe a good time to sneak in a little pay rise there?
Yeah, I think that'll depend on, you'll know from a gut instinct if your company is in a position that it might be able to entertain that offer. But yeah, why not?
So coronavirus has put our health and also our mortality into question, and it's at the forefront of people's minds. For viewers that are worried about their health and the impact on their families, are there any plans or anything out there that can give them peace of mind?
Yeah, it's something I've actually got asked quite a bit over the last 12 months, and I've been working with a few clients on maybe updating their policies and getting them right for who they are now and their current situation. So if you've got any debts, like a mortgage obviously, or personal debts, then you should really consider life cover. It's normally very low cost, and it just gives your family a bit of peace of mind that if something happened to you, that debt can be cleared off. If you've got a family, if you've got children, for instance, it's extra important because they tend to be quite expensive. So if you have certain costs that you know are going to happen in the next couple of years, they might want to go to college, university, you might want to help them out with their first house, then you can put in place a policy that helps your family continue on in hopefully as close a way as would have happened had you been there. Paying out either a large lump sum for your family to invest and use to provide sort of income top up, or just actually a regular income that comes in so that your family, their income is uplifted to compensate for the fact that you're not there earning the money. From a illness perspective, there's policies called critical illness policies. They are usually quite a lot more expensive than life cover because they're far more likely to pay out because they pay out for specified critical conditions normally. So they're something that you should definitely consider, because even if you don't have any debt, it allows you to perhaps adjust your lifestyle or your house to deal with an illness, or perhaps just take some time off work with as little stress as possible because you've had a pot of money to fill the gap. Then you've got income protection policies that help you. They're really good, especially if you're, for instance, self-employed, whereby your income is very important. You are the only person generating that income. And they will pay out if you're unable to do your job or perhaps a certain set of daily living tasks for a specified period of time, and they'll pay a regular income to help you not have to rely on the state really. The other thing is, if you're employed, a lot of time you get things called flexible benefits. So perhaps your employer will give you a gym discount, or perhaps they'll give you a bit of life cover. So it's always worth reviewing to see that those aren't doubling up on something you've already got. Or if you're not using them, perhaps consider using them. So maybe you might get some private medical insurance or a dental cover. So always worth looking at. And finally, if you haven't done a will, it's a really important thing to do. It's a bit depressing and people put it off. But if you do it, it just makes sure that if something happens to you, there is a path where your assets and your loved ones are cared for. So especially particularly important if you've got children, it specifies who's going to look after your children if something happens to you. So again, really hard thing to discuss, but again, talking about it, making sure you work through it and then get it written down. And then, what you want to happen should happen after you're gone.
That's great to know. Obviously, people have had a lot of time on their hands. I have. And so we've been thinking about the future and about pensions and savings. What suggestions would you give to people like me about future planning for retirement?
Okay. Again, retirement planning is one of those things where it's a pretty broad and complicated subject. So it's always worth perhaps speaking to a financial advisor or at very least maybe speak to your HR department about what you've got if you're in an employment position. But broadly, there's two types of pensions. There's defined benefit that you tend to get through, say, being a teacher, NHS, local government worker, whereby it's defined by how much you earned over a period and how long you worked there for. So it's quite easy to get a rough idea of what you're going to get at the end of it if you continue to work there. And then you've got defined contribution, which is what most private sector people or self-employed people would have, where you pay in your money each month, it gets invested, and whatever it's worth at the end of the period, you then use to either buy an income or generate an income. So there's two different broad sort of types of pensions, and ultimately, if you're in a defined benefit type of pension, if you're not already paying into that pension, if it's something you've got on offer, then you really should consider joining it, because ultimately they're some of the best pensions that are still available. From a direct defined contribution pension, you definitely need to think about starting paying into one if you haven't got one, and if you've got one through work and you're part of what they call an auto enrollment scheme, it's so much of a benefit to get it used, because ultimately the employer is paying into that pension as well. So it's not all on you, the employer, and you're getting the tax relief. So it all is a very efficient use of your money in terms of long-term savings. And obviously the other case is if you're self-employed, it's all on you. So you need to think about what's your priority in your business plan and how you want to tackle retirement. And if you haven't got a pension, again, perhaps you should consider setting up a private pension as a method of doing that. Ultimately, with pension planning, the sooner you start, the shallower the mountain is to climb. It's definitely one of those things where it's a marathon, not a sprint. You need to try and take it easy and build on your pension over time as early as possible.
That's great to know. And it's I suppose it's no surprise that a large proportion of the UK have actually benefited from this pandemic and financially, and have time to save and have time to build up, I suppose, a little nest egg. What would be your suggestion to them with they've suddenly found themselves in a place where they've got a bit of a windfall? Okay.
Well, again, I think if you found yourself to have a bit of spare cash, you need to sort of take this opportunity to have a look at how your finances have been organised to now, and essentially get the foundations right. So you need to look at whether or not you've got an emergency fund in place. And all too often I meet people and they're thinking about investing or planning for the long term, but when you ask them what would they do if a financial emergency happened, they haven't got that sort of buffer of available cash that they can get to. So it puts the pressure on things like credit cards or perhaps taking money out of an investment that was there for the long term. So that's the real base point, is to get the foundations right. So you get your emergency fund in place, which is typically seen to be 3 times your outgoings. Sometimes you could view it as 3 times your income. It's kind of where you're comfortable. Have that in a cash pot that's available instantly or within a very short period of time, because let's just say the boiler packs in, or you need to do some work on the house that's urgent, or maybe even you lose your job. That just takes that pressure off you financially, that you don't have to dive to the credit cards, which is not a particularly good long-term approach. On top of that, then you want to maybe start looking at reducing debt. Maybe you could put that money towards paying down some existing credit cards, etc., that you might have. And then pretty much dragging on for my last 2 questions, if you look at your protection, have you got something in place to look after the family? Are you looking at long-term pension planning? So it's a case of trying to make sure that you start from the bottom and you build up. And I think it's also important to say that think about treating yourself. It's been a stressful 12 months, and you work and you get that money to try and make your life better. And I think this year has been one of those ones where you just have to think about sometimes rewarding yourself and your family, or maybe giving a bit to charity to try and do a bit of good with that money as well, rather than trying to focus all on the nitty-gritty.
Yeah, that's really good advice. And flip reverse, obviously there's been people that haven't benefited from this pandemic, and the Office of National Statistics are saying about a quarter of the UK population are worse off, with furlough, redundancies, and people just having less cash each month. What would be your suggestion to them, and how to budget and how to sort any savings if you can?
Okay, well, when I talk to clients about this, and obviously it comes up all the time when you're talking to people about their savings and how they reduce costs or how they adapt to maybe a lower income. And I always like to talk about the 4 R's. And that's essentially that you've got to record, review, reduce, and then redirect. So if I break those down, ultimately the most important thing, if you have perhaps seen a drop in income, or maybe, even worse, you've had no income coming in, you really need to sort of record how your finances are. So you need to look at what you've got, what you have got coming in, and really importantly, what you've got going out. So whether or not you do that with a spreadsheet, or you use a bank like Monzo or Starling, where they will help you categorize your spending. And it's a great opportunity really to try and figure out where your money's going. Because like most people, it's we all look at the bank balance at the end of the month and think, how did I spend that amount of money? So if you record it, you can figure out where that money went and ultimately what you don't need anymore. Then the second part, being review, is to think about what was essential, what was non-essential. So you might have your gas, electricity. Well, that's pretty essential. However, you might have also spent a lot of money on takeaways that perhaps wasn't essential, or maybe you've got some extra insurance that you realise that is not is actually duplicating what you've already got. So you might have a home insurance and maybe a mobile phone insurance, and actually your home insurance covers your mobile phone as well. So you might be duplicating things. And then if you try and reduce those outgoings, then you can use things like price comparison websites, things like Uswitch to look at your gas, electricity. Are you paying a fair amount? Same thing with mobile phones. A classic one that I always see is Sky broadband costs. Everybody who's ever had some cable TV or Sky TV knows that it goes up every year. And if you let it go away, just like car insurance, it will end up way above what is actually a fair price. So spend some time, trying to reduce those costs. And then it might also be that you trying to reduce how much you're spending on luxuries that, perhaps at the moment you don't need. And then finally, try and redirect some of that money. So if you get into a position where perhaps your income starts to increase again, try and redirect some of the money that you saved into things that you need. So again, drawing on things like emergency funds and maybe protection, etc. Trying to make sure you're making the best with your money.
That's brilliant. Thank you very much. Sound advice. I suppose it's wrapping up now. And what would be your 5 pieces of advice you'd give to any one of our viewers for budgeting and managing your money?
Okay, so obviously I'll draw on the 4 R's, so that'll take up all 4 of those 5. So obviously record, review, reduce, and then redirect. And then on top of that, I think a really underappreciated part of saving and budgeting and sort of looking after your finances is talking about it. So make sure you talk about it with your partner, obviously, if you have one, and then maybe your parents, ultimately somebody you're comfortable talking about money with. Because it's a two-way. You can't expect one person to figure it all out, and being honest with your finances and getting a second opinion is always very important. And obviously you can use websites like Money Saving Expert, etc., which will give you tips from other people. But I always think in terms of reducing the stress, you have to have a working understanding of how you discuss money with other people, because money is one of those things that can cause flare-ups in a relationship or in your own life internally. And trying to look after that, it's a really good way of keeping your stress down, of just being able to talk about money in a sensible and constructive manner.
That's such salient and amazing advice there, Jon. I think those 4 R's need to be copywritten. Definitely do that.
Okay.
Talking about finance and money has really helped me, and you've really helped me too, Jon. So I want to say, diolch yn fawr, thank you very much for that. And also thank you so much for coming on to this and giving our viewers such great suggestions.
Thanks, Dave. It's been a pleasure, and hope to get to see you in the real world at some point.
You too, Jon. Take care and bye for now. Wow, that was some amazing advice. Jon's a great guy, and he's helped me out personally and in business with my finances and money, so can't thank him enough. I would love to hear how he's helped you out in the comments below. So remember, if you've enjoyed this video, give us a like, ring that bell for notifications, and subscribe, so I'll see you in the next video.